Welcome back to the Deep Dive. Today, we're diving into Stripe, a company that, well, it sort of became the invisible plumbing for money on the internet.
That's a good way to put it. Invisible, but absolutely essential.
Yeah, and our sources really paint this picture of the early 2010s internet. Things were moving incredibly fast.
Yeah.
Facebook, Amazon, all these startups popping up everywhere.
Innovation was booming.
But one thing was seriously lagging behind, like almost stuck in the Stone Age.
Yeah.
And that was online payments.
Oh, absolutely. If you were a developer, maybe a creator, trying to actually get paid for what you were building online.
It was a nightmare, honestly.
Mhm.
So complex, expensive, kind of baffling, really.
You didn't just need a website, forget that.
Yeah.
You needed a merchant account from a bank.
Right.
A separate payment gateway, maybe dealing with multiple vendors.
And the integration.
Yeah.
Weeks,
Mm.
often painful weeks, dealing with banks that just didn't get software.
It felt completely mismatched, didn't it? Like trying to fuel a high-speed train with, I don't know, buckets of coal.
Exactly. It was this huge hidden friction point.
Yeah, a real structural problem. Because starting an online business itself, the cost had plummeted. You could get server space, build a site for next to nothing. But connecting that business to the actual money system, that was still incredibly hard, full of these legacy hurdles.
It created this weird situation. The internet's global instant.
But its wallet was slow, clunky, and tied to borders.
And this is the problem, the gap that two brothers from rural Ireland decided they were going to fix.
Patrick and John Collison.
Yeah, not exactly your typical Silicon Valley founders. They saw this mess, this complexity.
And decided to basically turn it into a few lines of code. Simple, elegant code.
So our mission today is to unpack that story. How did they take what was essentially a side project and turn it into this core piece of internet infrastructure?
And reach that, frankly, staggering $95 billion valuation by 2021. We want to look beyond just payments and see the strategy.
See it as like a masterclass in scaling simplicity.
Precisely.
Okay, so to really get why they could tackle this, we need to understand where they came from. Because it's not the usual story.
Definitely not. It starts in Dromineer, Ireland. Tiny village, lakeside, maybe a few hundred people.
Yeah, tiny. Their parents ran a small hotel there. So very grounded, practical roots.
And I think that background was key. It gave them this blend, deep technical smarts combined with, real-world small business sense. They understood running something tangible.
And they were incredibly bright. Patrick, the older one, apparently taught himself programming when he was, 10?
Around that, yeah. The sources describe him as very methodical, thoughtful.
And he won Ireland's Young Scientist of the Year award at 16 for building his own programming language.
Which is just extraordinary. And John, the younger brother, equally sharp. Maybe more spontaneous, a super fast learner.
It's easy to focus on them being young prodigies, but maybe the real point is just how capable they already were.
Exactly. It wasn't just about age. They got into top U.S. universities, Patrick at MIT, John at Harvard.
But they didn't stick around, did they?
No, they both dropped out because they saw this other, bigger opportunity calling.
And they already had a win under their belts before Stripe. Octomatic around 2008?
That's right, Octomatic. It was basically a tool for eBay sellers, helping them manage their listings, sort of solving an earlier e-commerce pain point.
And they sold that?
They did, for $5 million, while Patrick was like 19.
$5 million. Before they were even old enough to legally drink in the U.S. That's amazing.
But the crucial bit, the real insight, came after that sale. They'd built and sold a software company.
Huh?
And the absolute hardest part, the most frustrating thing, setting up the system to actually collect the money for it.
Ah, okay. So they experienced the pain firsthand, even as successful tech entrepreneurs.
Exactly. They ran headfirst into those ancient banking processes, the endless forms, the delays. They realized the biggest bottleneck for online businesses wasn't a lack of ideas or even coding talent.
It was the money part, the friction in just getting paid.
Right. That moat built by regulation and legacy systems. They thought, that's the problem we need to solve, not just for us, but for everyone.
So that leads to the core idea behind Stripe, which, when you state it, sounds almost ridiculously simple.
It does. What if accepting payments online from anywhere in the world was as easy as just copying and pasting a few lines of code?
Like embedding a YouTube video or something. That's simple.
That was the goal. And initially, it wasn't even meant to be a company in the grand sense.
That's the side project.
Yeah, they called the prototype Dev Payments. Really tells you who it was for, right? Developers.
Yeah.
It was a tool for themselves, for their friends, people who were just fed up with the existing options like PayPal or Authorize.net at the time.
And the benchmark was speed.
Total speed. Their internal rule was, if a developer can't integrate this in 5 minutes, we've failed.
5 minutes compared to weeks of paperwork and calls.
Exactly. And when they started sharing it, that's when the validation hit. Instantly.
Developers started using it.
Yeah, emails started coming in. Wow, I just set this up in literally 5 minutes. It works. I didn't have to call anyone. I didn't fill out a form.
That must have felt huge.
It was revolutionary because people need to understand the friction Stripe removed. Before them, getting that merchant account was the big hurdle.
Right, you mentioned that earlier. It's like a special bank account.
Sort of. It's a specific agreement with an acquiring bank allowing you to process card payments. It involved credit checks, business verification, fees, long delays.
A whole bureaucratic layer.
A massive one. Stripe basically said, we'll handle all of that complexity. You just talk to us through our simple software.
They absorbed the messy back-end stuff.
Precisely. And the key to that was their API, the application programming interface.
Okay, break that down simply. The API is like the instructions.
Yeah, think of it as the language or the set of rules that lets your website talk to Stripe's system, which then talks to the banks.
Got it.
And all the other payment APIs back then. They were notoriously complex, clunky, poorly documented. It was hard to work with.
But Stripes was different.
Stripe's API was designed to be the opposite. Super clean, minimal, intuitive. Developers loved it because it just made sense.
And that developer love became their core strategy, didn't it?
Absolutely. This was maybe the most brilliant part. Instead of going after the big fish, the Fortune 500s, like the old guard did.
They went for the builders,
Yeah.
the engineers, the small startups, the solo creators.
Exactly. They focused entirely on the developer community.
Why was that so smart?
Because it bypassed the traditional gatekeepers. They figured win the hearts and minds of the people actually building the next generation of internet businesses.
And Stripe would become the default choice.
Right. You don't need to convince a VP of sales in a long meeting. You convince the engineer working late, trying to ship a feature, who just needs something that works now without hassle.
So it was about grassroots adoption, powered by simplicity and elegance.
Exponential growth from the ground up, instead of slow, linear enterprise deals. They bet that developers would choose the best tool, regardless of who made it.
And that bet paid off, big time. That developer loyalty started making waves in Silicon Valley pretty quickly.
Oh yeah, Paul Graham, founder of Y Combinator, the famous startup incubator, he saw it immediately. He got the potential instantly.
And that opened doors.
Big doors. Suddenly you had people like Elon Musk, Peter Thiel, powerhouse VC firms like Sequoia Capital getting involved, early believers.
That's serious validation for what started as a side project.
Huge validation. And by 2011, maybe 2012, Stripe wasn't just a cool tool anymore. It was starting to power some really significant companies.
Like who?
Think about Shopify, Lyft, Kickstarter, companies that were fundamentally changing their industries.
Wow, so Stripe was becoming embedded in the infrastructure of the new internet economy.
Exactly. Their early tagline was bold too, the new standard in online payments. They weren't shy about their ambition.
And this is where we see that shift in thinking, right? From just payments to something bigger.
Definitely. The Collisons themselves started talking about it differently. They weren't just a payment processor taking a cut. They saw Stripe as infrastructure for the internet economy.
Okay, that infrastructure analogy, let's unpack that a bit for listeners. What does that really mean in practice?
Well, think about a physical city. You need roads, bridges, power lines, water pipes, all that stuff you don't really see or think about daily.
Right. It just works in the background.
But without it, nothing functions. No commerce, no movement, nothing. Stripe aimed to be that for the internet's economy, handling the essential, often invisible flow of money, dealing with compliance, security, complexity.
So businesses could just focus on building their product or service.
Exactly. And this infrastructure idea directly connects to their business model and that huge valuation.
How so?
They didn't get into complicated enterprise contracts or volume discounts, not initially. They offered a simple, transparent pricing model, usually a small percentage plus a fixed fee per transaction.
Like 2.9% and 30 cents, that kind of thing.
Yeah, that became the standard. And because it was simple, predictable, and applied pretty much everywhere.
It scaled beautifully.
Perfectly. Every transaction was profitable. They could release their software globally. And the model just worked. No need for thousands of custom deals.
So the vision became truly global, not just fixing U.S. payments, but enabling anyone, anywhere.
Right. Their mission evolved explicitly to increase the GDP of the internet. That became their stated goal.
Increase the GDP of the internet. That's ambitious.
Hugely ambitious. It meant lowering the barrier to entry for everyone, whether you're a, solo designer in Southeast Asia or a tech startup in Berlin.
Making it possible to start an online business without needing a law degree and an army of accountants just to handle payments and taxes globally.
That was the dream. And to achieve that, they realized they needed more than just the initial payment processing code.
They had to build out the toolkit.
Exactly. They started adding features systematically. Tools for recurring billing and subscriptions, sophisticated fraud detection using machine learning that became Stripe Radar. Okay.
Then things like Stripe Connect for platforms and marketplaces. Even Stripe Atlas.
What's Atlas?
Atlas is amazing. It basically lets entrepreneurs anywhere in the world easily incorporate a company in the US, set up a bank account, get a tax ID, and start using Stripe all online in a few clicks.
Wow, so literally removing the geographical barriers to starting a US-based company.
Pretty much. They just kept identifying the next major point of friction for online businesses and built a solution for it. Treasury services, lending, even carbon removal initiatives integrated into checkout.
They built the whole ecosystem.
They built the whole city, like we said, not just the payment gateway. By constantly solving the next problem, they made it so businesses, especially new ones, really only ever needed to integrate with Stripe for almost all their financial operations.
And that comprehensive infrastructure-first approach is what justifies that eye-watering $95 billion valuation.
That's the strategic core of it, yes.
Yeah.
It wasn't just about payments, it was about owning the financial operating system for the internet. It really is an incredible story. From two brothers in a small Irish village, spotting this frustrating complexity.
Seeing paperwork and bureaucracy.
And deciding we can replace this with simple code.
Yeah.
And in doing so, fundamentally changing how money moves online globally.
It's a powerful lesson, isn't it? For anyone listening, maybe wondering where the next big opportunity lies.
Yeah.
It suggests that often the most impactful revolutions aren't the loudest ones. They're not always the flashy consumer gadgets.
Sometimes they're hidden.
Sometimes they're just quiet, elegant lines of code that address a deep systemic inefficiency. Something that makes the digital world work just a little bit smoother, a little bit easier for everyone else who's building on top of it.
The Stripe story really makes you look around, doesn't it? Look at the digital tools and processes we use every day.
And ask, what are we just accepting as necessary complexity right now?
What's still clunky or wrapped up in old rules or just plain difficult?
Exactly. Where is that hidden friction, that legacy process, just waiting for someone to come along with a few simple, brilliant lines of code and completely rewrite the rules?
Because that friction.
That could very well be the next $95 billion opportunity.